Okay, everybody, this is Tony with Success is Imminent Trading and Coaching. Many of my students are making money at this point. What that means for me is that people have understood the concepts and the strategies that I have been giving to them, recording for you guys and teaching you guys. At this point, you're not new to it. You know what's going on. You know how to analyze these schematics. You know what steps to take. And so I'm going to give you a full breakdown just to give you guys a little bit more of a current understanding. Make sure you guys aren't alone. And just showing you my own thought process on the market right now. And at this point, I'm not going to go over any basics in this video. I'm not going to be, going slow. I'm going to be going full on advanced explanations, straight to the point. So let's do it. This government shutdown is the longest US government shutdown in history so far. Okay, so this is the longest we've ever been shut down. At this point, we have a reason to go risk off and to go down. Economically, politically, we have a really big reason to go risk off. Because so far, we've been risk on, going up and looking for all-time highs, pushing for more longs and more longs. But now, at this point, at this very high, I personally believe, if you go to our resources tab, you go to the psychology market cycle chart, we are in euphoria. Okay, I think people are thinking we're going to be rich. I think they want this last little pullback. Everybody wants to buy into the dip and bring the market back up into one last bull leg until we all expect the fall. It's weird how that works, because since everybody wants this dip and wants to buy into the dip for a last bull rally, that must be an enticement for market makers, put us into the bear rally, into the bear zone. Because if everybody is buying this dip, the most amount of money to be made and the most amount of pain to inflict on people is to liquidate them. It's to take their stop losses out and to liquidate their account. And that's exactly the reason why I think that we are now in the current state of euphoria into complacency. Okay, I think this is where we just need to cool off for the next rally. I think this is where we're at. This isn't financial advice, obviously. This is just entertainment purposes. Go to a financial advisor, professional in accounting, to tell you and advise you where to put your money. Okay, this is just me personally, my personal opinion. It's not to tell you what to do. Coming into this, right, if we're going to be going down into this demand zone, which we have this last reaccumulation on the 1 hour or 4 hour chart, with the point of control being right here, around the 0.25 of this reloaded reaccumulation, the reload reaccumulation right here. So I believe this is where, obviously we're on the point of control right now, but very possibly we could hit the 0.5, 0.8, maybe take the leg up a little bit and then come back down for a redistribution. Now everybody will expect for it to probably keep going up and break through for another bull rally, but I'm not so sure about that. Now, we have the reload schematic for a demand area of the 0.5 to the 0.8 around here. But then we also have the overall reaccumulation with the 0.5 and 0.8 down here. So that's just two main demand zones down here. Because it is still very, I'm not going to tell you that it's just going to keep going down 100% because we're in the complacency area. Anything can happen in the market. And that's why we need to build our if-then scenarios. We need to build our what happens if this happens. Okay, so if this happens and we hit the demand zone and we end up just running back up for another bull leg, because it can happen, just because I don't think it will doesn't mean it won't. It's very possible, especially if the government opens back up. Okay, if government opens back up, of course it's super bad that it's already been shut down for so long, but if it opens back up, that does give us a reason for this last bull leg. Okay, and so if it does do that and hits the demand zone for us to run back up, fine. Okay, we can work from there off of this demand zone. If government opens back up, then maybe you can find a little micro accumulation to then take the entry off of, or the last point of resistance entry off of, in a micro reaccumulation. That might not happen. It might come down to this demand zone, then government opens back up, and then maybe you see, the way up. That's possible. Government opens back up, but instead we end up just redistributing, coming down, especially into these other demand zones, okay, which I have charted out here. This reaccumulation has 0.5, 0.8 down here, and then it also has the control point on the 0.5. That's on the 4 hour chart, and then down here on this huge reaccumulation that you can see on the 1 week. So obviously the reaccumulation right here, you can see on the 1 week. This is the area where if we do end up going into a bear market, we will see the main demand zone right here. We are likely to see that happen. And now, of course, there's the reaccumulation, right? I mean, the reload schematic right there. You can't see it on this time frame. Go to 4 hour maybe. Yep, so right there. This reload reaccumulation right here, 0.5 right there. And if you want the control point, it's going to be on that 0.5. So that's exactly why we need to make our if-then scenarios, because two things obviously can happen, up or down, and we need to build our reasons as to why. And the main reason right now that we should be paying attention to is the government shutdown. Now we have rate cuts, and obviously Powell, in this last speech, the chairman of the Federal Reserve, said that we are not sure if we're going to rate cut in December. Of course, we are expecting rate cuts in December, and of course, he can't just say that we're going to rate cut in December. He said that we're going to wait until we see the data and obviously make our decision based on what's happening at that time in December. Of course, that's what he's going to say, but likely he wants to cut the rates, and that's what we're expecting. What would happen with the rate cut? So that could be another reason for us if it comes to December, government opens back up, rate cuts happen, could be another reason for this leg up before we come crashing down. In between now and December with these rate cuts, we don't have the data. As long as the government is shut down, we don't have the inflation data. And inflation data is super important. Why? Because we need to know, if we cut rates, is it going to cause a spike of inflation? And if inflation is already getting sticky, ramping up, rate cuts are going to be worse for that. So if we rate cut after we see inflation data come up, even if government opens, we can see a redistribution. That's very obviously relative. You know, that there's no like hard number of what's inflation data going to be. If it rises a little bit, is that going to cause the bear rally? Nobody knows. Okay, I don't know. I'm not going to tell you I know, because I'm not a wizard. I don't know. I'm not a market maker. I'm just the one trying to follow the market. Okay, I'm the one trying to follow the market makers, and so are you. Okay, so most likely. But anyway, so rate cuts are coming, and we know that. We know inflation has basically shown us that it's kind of cooled off. It's kind of being easy, not so harsh, and it's not ramping too hot. And the main thing we need to focus on is this government shutdown. For right now, in the short-term future, the next week or so, I do believe that we're going to head down into this 0.5, 0.8 zone, possibly sweep this low for us to hit the demand zone of the 0.5, 0.8 right here, for them to come up. Right, U.S. indices has been broken down. If you have any questions, or you have any, if you have any questions, just let me know. If you have any specific economic or political caveats that I didn't address, let me know about that too. Okay. So now I'm going to move on. I'm not going to look at just indices anymore. I want to look at Bitcoin. Okay. So Bitcoin has a cycle. For 3 years, it runs up, and then for 1 year, it has a little bear rally. All right. Now, this is what I think. I think that we're in a bear rally, which is around this time of every 4 years. It's around this time of November, December, that we have this little bear leg. And I think what it's going to do is it's going to come down possibly to 60, 80, anywhere between 80 to 60,000. And this is where I think that it's going to start heading up and go up. Why does Bitcoin do this 3-4 year cycle? Listen, okay, Bitcoin has historically entered a bear market every 4 years due to the halving event, which cuts the rate of new coin creation in half. Okay, so Bitcoin is on a blockchain that needs to, basically, we need computer power to de-encrypt the blockchains, okay? And that's how we get the Bitcoin. There's a limited supply, but every 4 years, there's a halving, which cuts the rate of new coin creation in half. So that power to de-encrypt and gain the Bitcoin, it takes twice as long to get that one Bitcoin. So the supply reduction, the Bitcoin halving, is pre-programmed event that occurs every 4 years or every 210,000 blocks. So it's not time-based, it's actually, block-based. Every 210,000 blocks that get uncovered and created, it cuts the reward for mining new blocks in half, which reduces supply of new Bitcoins entering the market. Scarcity and price pressure happens. This reduction in supply, combined with consistent or increasing demand, can create upward pressure on the price, leading to a bull market after the halving. Because remember, our law of supply and demand, you have less supply, more people willing to buy, then price is going to go up. That's exactly what happens here, because it gets harder to get Bitcoin, so there's less supply. Or it puts a pressure on supply, right? And then, of course, there's a limited supply of Bitcoin in the first place, but to unlock these new Bitcoins that are still covered up, it cuts the reward in half. And again, it puts the pressure on the supply. So this reduction, combined with a consistent and increasing demand, because countries are getting into Bitcoin, they're creating their new cryptocurrencies themselves. Everybody's turning to Bitcoin to get away from banking and to get away from government banking. This is a once in a lifetime opportunity for people, especially you, if you are just now learning to trade. This is your chance to create insane generational wealth. This is the perfect time to understand these things about Bitcoin, about trading, investing. Now is the time, okay? The bear market onset, after the initial rally, the market tends to decline. This is often driven by a combination of factors, including profit takers and investors who bought during the bull run. So this bear market happens about 16 to 18 months after the halving. The last Bitcoin halving was early last year, April. Halving occurred, bull rally happened, and now look, okay? Following the euphoria of the bull run, profit taking and increased selling pressure often leads to the bear market. Bull run from the last halving, now we are in the profit taking and the downturn. All right? This is it. Build all the money you can, go work at McDonald's, go build your money, get the most amount of money you can, and once it's down here at $60,000, $70,000, money into Mara, into AST, into Bitcoin, into XRP, into Ethereum, put it all into Bitcoin, wait until it comes up into 200,000 and never comes back down again. So in 2020, May 2020 is when it halved, okay? May. So May 2020, where is that? May happened. Bull rally, huge bull rally. All the way to 2021, people weren't sure about Bitcoin, went to 60,000, boom, huge drop. Got scared of Bitcoin, but look at this. It reached demand zone, mitigated demand, and ran up. Boom, huge demand, hit supply. Supply was about 2021 November. People still scared of it. This is about 18 months, year and a half after the last halving. Then we hit the huge bear run. Then we get the next halving in April of 2024, April, when people bought from demand, bringing the price back up from the bear rally. So I would not be surprised if not only does it come down to 90, 80, 70,000, but it actually comes to 50, 60,000. I would not be surprised at all, because look at this liquidity we can sweep underneath this reaccumulation right here. After that, I believe it'll go sideways for a little bit maybe, or it could just possibly just pop up from there, because people are wise to Bitcoin now. Now, I'm not going to sit here and say that it's it's 100% that it's going to come down here to 50, 60, 40,000 because things have changed. Times have changed. People are hip to Bitcoin now, okay? It's just as I told you. This is now the time for people to get generation. This is the last moment where people who do not own wealth, who do not have anything, this is the last moment for them in Bitcoin, for the opportunity for them to do that is right here. So people are hip to Bitcoin, so possibly it might not do that. It might sweep this low, but maybe it won't come down to 50, 40. It might be around 80, 70, 60, which is why I'm telling you, probably around 70, 60, 80, somewhere around this area is where we're going to be at before it starts to pop. So I think 2026, around November, December, that's when we're going to be around here. Boom, then we go up. And it's really that simple. You can short on the way down if you really want to short Bitcoin. But I think this is it. This is the top. I don't think we're going to go any higher. I think that's it. Do I think if maybe government shutdown, rate cuts might give us another bull run to 150 maybe before we head down? Possibly. That's why I have this line up here. It's possible. I'm not going to say, everything is for sure, so just short now and hold, because you could get liquidated on the way up. If government shutdown or government opens back up, rate cuts happen, all of a sudden volume is coming into Bitcoin and we're heading up. Very possible. So don't just blindly, this is what trading is not just blindly trusting 100% your bias. Just because you have a bias doesn't mean you just 100% go for it, okay? Anything can happen, and that's why you need to put your if-then scenarios. So what happens if it comes to demand zone down here at 80,000 or so, and then starts to shoot back up when government opens back up and rate cuts happen? Fine, that's fine. Take the ways up. But I don't think that's going to happen. I think we are at the end of this profit taking. This is euphoria. This is the 18-month mark. It is the 18-month mark for when we're going to start to head down. And my obvious zone, liquidity demand zones are here. 60 to 50K and 80 to 60,000 right here at the 0.5 to 0.8 and the 0.5 to 0.8 over here. So that's it. Thank you guys for watching. And again, if you have any questions, if you have any caveats that I have not answered to, or you have any specific questions that I did not cover, let me know. Join the one-on-ones if you haven't joined the one-on-ones. I'm not even sure if you're going to see this video if you're not in the one-on-ones. And for those of you who are in the one-on-ones, congratulations on your profits. I know a lot of you have already made profits. And I'm going to be making a penny swings video. I already have one, but it's not as in tune and in depth as it should be. So I'm going to go ahead and do that.